It's been a pretty bad month for the markets, and particularly the American stock market. But I'm a long-term investor, so I don't expect every month to be in the green. In fact, I expect plenty of bumps in the road, and we'll be sharing my portfolio journey on this channel no matter how good or bad that month is. So with that, welcome to my April Stock and Shares portfolio update. In this video, we'll go through how my InvestEngine Stock and Shares ISA has been performing across the last month. And as always, we'll start off with how the markets have been performing generally, so we have a reference point for my own portfolio's performance. Then we'll bring up InvestEngine's app and take a look at my own portfolio. For those new to the channel, I have a plan to build a £100,000 portfolio within my Stock and Shares ISA account in the next 3 years. And I'm using this YouTube channel to document my journey with monthly portfolio updates. I hope by sharing my journey, it might be useful to others who are thinking about investing and also those who've already started investing. So if you'd like to follow my own personal finance journey, I'd greatly appreciate a subscribe. I also do a bunch of other personal finance related videos, so please check that out. But for this video, let's begin, and let's start as always with how the American stock market has been performing by taking a look at the performance of the S&P 500. We can see the S&P 500 is down by 4.93% over the last month at the time of recording. In the last 5 days alone, it's down 3.54%. And in all of those days, the index declined every day, in that it closed the day lower than it started. And this marks the worst run of the S&P 500 in a year and a half. So it's been an awful month, with a particularly bad period between the 12th and the 19th of April. In the month, some of the big tech companies have particularly suffered. For example, Nvidia was down by more than 15% over the last month, and it fell by more than 10% in one day, the day before I recorded this video. The question you may have now is, why is this decline happening? Many analysts are suggesting this is because of inflation being stickier than expected, which has lowered expectations of multiple rate cuts this year from the Federal Reserve. Inflation in the US was recorded at 3.5% in March, which was a 0.3% increase from the 3.2% figure in February. Of course, the bigger picture with this graph is that inflation has significantly reduced from the peak above 9% in mid-2022. However, since June 2023, inflation has been sticky around 3% and has not reduced to the level desired by the Federal Reserve, which is 2%, their target level rate. The Federal Reserve Chairman Jay Powell even acknowledged this, saying that it's likely to take longer than expected for inflation to return to the central bank's 2% target level. This is bad news for markets, as stock markets tend to thrive in low interest rate environments, and the Fed have suggested they won't cut interest rates until they're more confident inflation is moving sustainably to the 2% level. At the moment, inflation is staying around the 3 to 3.5% mark, and it's not moving as expected towards that 2% level. So all of this has likely contributed to the big sell-off in the markets over the last month, as many investors have cut their bets regarding how many rate cuts will happen this year from the Federal Reserve. So this is likely to be a key factor in why the markets have declined across the last month. Another factor likely contributing to this decline is the conflict and tension we're seeing in the Middle East between Israel and Iran. Typically throughout history, political tension between countries and tension which could escalate to war leads to a negative impact on the stock market. So it's clear that certain factors have negatively impacted the stock market this month, and with investing, months like this happen throughout history, leading to negative performance. However, we also know that performance can change very quickly, and even by the end of next week it could change, as around the same time this video will be released is when the new US GDP data will come out, and also a flurry of big tech earning reports. These factors will have a significant impact on the performance of the S&P 500, and even if it leads to a negative impact and negative performance for the rest of April, at times like this, I always think it's worth retaining a long-term perspective for investing, as even if we look at the last 6 months for the S&P 500, which is still a fairly short-term perspective, the S&P 500 is up by nearly 18%. And if we zoom out to a more long-term perspective for the last 5 years, that downwards trend we see at the moment this month is hardly even noticeable. Instead, what we see is a satisfying upward long-term trend. So in times like this, I like to personally look at the long-term trend for the markets, just to remind myself it's a long-term journey with investing. Now we know the performance of the markets, let's move on and take a look at my InvestEngine portfolio performance. And let's bring up InvestEngine's app to do so. We can see, not too surprisingly, my portfolio is in the red over the last month. I'm down by 0.21% in percentage terms and £171 in pound terms. and my portfolio is now sitting at a balance of £22,851.76. So it's not been a good month. And let's look at the portfolio graph here to see how the performance has evolved, looking at the portfolio balance at the start of the month and the end of the month. We can see at the start of the month, which was a month ago today, the 20th of March, my portfolio had a value of just over £20,000. Then there was lots of fluctuations throughout the month, mostly downward, and we finished the month at the time of recording at a balance of £22,851. And that increase in value for my portfolio has completely come from my own contributions. I contributed £3,000 over the last month. And the reason I've contributed more this month is to try and max out the previous year's ISA allowance. So all of the contributions were either the end of March or the start of April before the new financial year begun. I haven't yet contributed in this financial year, as I'll be relying on my savings plan for contributions going forward. I have a savings plan set up for £1,500 every month, and this comes out at the end of every month. And I'm recording the video before this contribution happens, so that's why I haven't contributed yet in this financial year. So overall, it's clear that it hasn't been a good month for my portfolio. My portfolio balance is up overall, but this is completely down to my contributions. The actual performance of the portfolio is negative. And over the last week particularly, if we look at this graph, it's been bad performance, which is reflective of what we spoke about earlier, with the S&P 500 having a really bad week between the 14th and 19th of April. If we look at the graph here, on the 14th of April, my portfolio had a balance of £23,423, and we can see it's gone down significantly since then to £22,851. So over the last week particularly, my portfolio has had bad performance. So now we know the portfolio has had bad performance, let's take a look at the individual ETFs and see how they've been performing over the last month. And let's start as always with the biggest ETF in my portfolio, which is the HSBC MSCI World, making up nearly 70% of my portfolio. This unsurprisingly is also down. It's down by 0.91% in percentage terms and £228.51 in pound terms. And because this ETF is heavily skewed to the US, this isn't surprising, as the US had really bad performance over the last month, as we went through with the S&P. So this ETF will of course be impacted by that, because the majority of this ETF is exposed to American stocks. The next ETF is the iShares MSCI Emerging Markets, and we can see with this ETF, it's marginally in the red in pound terms. It's down by 21 pence, but in percentage terms, it's surprisingly in the green. It's up by 0.63%. This is quite surprising personally, as I was expecting this ETF to have much worse performance. And if we click on it, just so we can review and understand its performance, we can see over the last week, it's had really bad performance. It's down by 1.58%. But the reason it's up overall across the last month is because it had a really good end to March and start to April. So because of that great start to April, it's led to overall positive performance for this ETF over the last month at the time of recording. If we move on to the next fund in my portfolio, the iShares MSCI World Small Cap, this fund is also down. It's down by £35 in pound terms, and it's down by over 1% in percentage terms. It's down by 1.18% in percentage terms. And I'm not too surprised that this is the worst performing fund so far in my portfolio, as small caps tend to be heavily impacted by interest rate movements. And given we've got some bad news over the last month about interest rate cuts potentially being delayed, I'm not too surprised it's heavily impacting this specific fund. I'm not expecting good growth in this fund until we have interest rates being cut. So I think we've got a long journey for good performance with this fund, but I'm still committed to it in the long term. The next fund is the iShares Physical Gold Fund, and this fund is actually in the green. It's up by £176.83 in pound terms, and it's up by 13.73% in percentage terms. So this is really good performance. And the reason why I have this gold fund in my portfolio is to provide a hedge to the stock market funds in my portfolio. And this is exactly what this fund is doing this month. It's providing a hedge, as all the stock market funds in my portfolio are down, but this fund is significantly up. So it's good that that hedge theory is kind of working this month. So good performance with this gold fund. The last fund in my portfolio is WisdomTree's Cloud Computing, and this is the worst performing fund in my portfolio over the last month. It's down by £84.52 in pound terms and 5.86% in percentage terms. So an absolutely terrible month for this fund. But I'm not too surprised, as this fund is mainly exposed to US equities And as we saw the S&P 500, US equities have done particularly badly over the last month. And this fund, unlike the others in my portfolio, is not very diversified. It's focused on one specific industry and it's focused on a small number of companies. And when you get less diversified funds, they tend to have bigger upswings and downswings. So bigger fluctuations when there's less diversification. So I'm not too surprised that this fund has done badly. So overall, my portfolio is down over the last month. I'm not surprised by this because the overall market is down, and I'm going to continue with my long-term plan of investing 1,500 every month. I don't look at what the market is doing. I have a long-term approach of investing the same amount every month, no matter what the market is doing. So this small bump we've seen this month will not affect me personally in terms of my investment plan. I expect bumps in the market like we've seen. And we've been on a big long rally anyway, so this was likely to end at some point. I'm just happy that rally happened as it's led to a good start to the year overall. If you'd like to check out why I've chosen InvestEngine again for my stock and shares ISA this financial year, then I have a video around here. But for this video, thanks for watching. Let me know how your portfolios have performed. Thanks.